When each day is becoming worse than the last, you know you need to pay attention, and that's just in the UK. Hi, this is Everyday Prepper. Welcome to the channel. Now, I know in my video yesterday I said that I'd be back at 2 p.m. in the afternoon with an update on the markets. Now, I apologise that I wasn't straight back. I actually forgot that I have a job and I needed to go out to work because I don't earn any money from this channel. If you do want to support me, there's a link in the description. But of course, the best way to support this channel is to like and subscribe if you haven't already. So yeah, I also needed a bit of time to study the markets and just watch what happened at close. Market close yesterday, which is about 5 p.m. On a weekday for the UK markets, and for the US it's 9 p.m, approximately 9 or 10 p.m. For the US markets to close. So I needed to kind of see how they close out, and yeah, things have definitely got worse. I'm going to run through the markets on my phone in a second with a screenshot of the phone. The other couple of things I wanted to talk about were the escalation of violence in the UK, spreading to different towns, and what seems to be happening in certain towns, and what's being reported and what's not being reported. Also, I want to cover some updates in the Middle East, really just kind of just showing you what various news outlets are reporting, because as a prepper, these are the main three things that are concerning me right now, and they do affect certainly me directly. They may or may not affect everybody else directly. What I mean by that is, for instance, with the markets going down, my pension fund, which is invested, it's self-invested. I've got pension funds in a self-invested personal pension plan, which I keep an eye on regularly. I've managed to do very well with it over the years. I've had it in there probably for about 10 years now, and I've been managing it all myself, and I have lost now close to 10 grand over the last 6 months. But I'm not too concerned. I'm not going to withdraw all my money or take it all out and put it into cash, and I'll explain the reason why in a bit. The other thing that concerns me directly, again, is the protests and riots in the UK, the violence in the UK. Although I live in a small town and I don't anticipate things getting too close, because I am on the southeast coast, which is where a lot of the immigration happens. I would imagine that Dover, which isn't too far away from me, could be a target at some point. So it may even directly, but possibly indirectly affect me. So I'm just keeping an eye out for what's happening there. And the Middle East, of course, there's a lot of rhetoric talking about the Middle East developing into World War III, which of course will affect all of us directly, what with probably the government actions, rationing and curfews and that kind of stuff. So first of all, let's have a little look at the markets and do an update from yesterday. So we've got the markets up on my phone now. So a quick update, but there's some really interesting things have been happening, and there's some quite concerning news on one of these, which I'll just want to report. So first of all, let's just go through what I did do yesterday. So the markets in the States are not open now. It's the time of recording is 11:30 in the morning on Tuesday. So the American markets don't open until 2 p.m. But as I said yesterday, the IG, the trading platform, is predicting what the underlying markets are doing. So they're still ticking away. So the US 500, top 500 shares in the States are still ticking away. So just to show you how a lot of this works, right? So let's go into the FTSE now. So this is the FTSE, and obviously we saw big drops over the last few days, massive drop yesterday, and then here, if I can just, there we go. There, the bottom red, so where the red goes right the way down to the bottom, the lowest was 7913. I'll just move that out of the way so you can see that bottom spike, and then it's gone back up, sort of green. Now, the underneath here, where it says volume, and you've got all these other charts down there. Now what that is that's volume of trading. Green is where people are buying, and red is where people are selling. So what we've seen on the main chart, you will see that there's a green for today. And usually what happens is when there's been a big drop or even a big gain, you'll usually see around a 50, what they call a 50% retracement, which is where people spot the low point and then buyers come into the market trying to get a good deal. So they're buying stock at a lower price. It's kind of like the stock's on sale. So they come in, they buy in, but then they realise that it's overvalued, and then it comes down again. And you can see that on the chart below, where it says volume, all the red gathered together there. So there's a lot of red there, more than green, if you know what I mean. There's a little bit of green today, so we'll have to see how that kind of plays out. These things don't always play out in one day. It might take several weeks, but you can, whether a trend will form or not, I don't know. But the overall trend on the FTSE has been kind of sideways after a lot of growth on the left hand side there. You can see a lot of growth, and then it's kind of gone sideways, and then eventually it's kind of bottomed out. So yeah, again, very, very difficult to predict. I'm not a day trader, so I don't know all the ins and outs of how to predict the stock market and what have you, but you can see what's going on. There's a retracement there. It's kind of almost within a 50% retracement. They use something called the Fibonacci series as like an overlay to, I'm getting technical now, but they use that to kind of predict where it will bounce back to before it turns again. So again, over the next few days, I might do some updates. I'll probably give it a few days, or maybe towards the end of the week, like Thursday or Friday, do another update on the markets and see how that's played out. But it certainly looks like we're not looking at all the buyers flooding the market just yet. Again, we'll have to see. So going back to US 500, so top 500 tech stocks. Again, if you look on the right hand side of the top chart, you've got today's as of now at 5225. It dropped right the way down to 5,100 yesterday, but it has again sort of pretty much a halfway retracement, 50% retracement, which is what is expected in this kind of mass drop, if you know what I mean. At the bottom chart, you can see over the last few days that all the sellers are in. There's no green, a tiny little bit of green a couple of days ago, but so that means that the market is kind of erred towards people selling their stocks, selling their tech stocks. And what happens here is when you get a big panic like this, when you get a big drop in the market like this, people look at their pensions, people like me, and they go, oh my God, I've just lost 10 grand, quick, sell up before I lose it all. Well, to lose it all would be, you'd have more to worry about than losing your money. If the stock markets were to go entirely and the whole financial system was to collapse, you'd be talking third world within weeks. It would be absolutely huge. So I'm kind of personally, and this is not investment advice, I'm not an expert, but personally for me, I've seen this happen before. I've seen worse than this happen before, and it's not considered a crash until pretty much the majority of the stocks drop by 20% from their previous high, which we're nowhere near at the moment. And even when they have dropped, very rarely, even during like the Great Depression and stuff, when they did drop more than 20%, they bounced back and then gained more than they had done originally. So I'm confident that it will bounce back, although there's a lot of things going around in the world. It's very difficult to predict, but to jump now and panic and sell all my stock while everything's low would be a bit of a crazy move for me personally, and that's why I'm not. I'm holding, even though I've woken up this morning to my pension having dropped by £2,500 just this morning. I'm not going to panic because I've got pretty diverse stocks. And a lot of people, they would have found that their pension of a similar size, if they're investing in different stuff or more towards shares, for instance, rather than indices, they may have dropped bigger jumps. When I say indices, in case you don't know, that's like it's an investment that you can have where it's a whole host of. So what we're looking at here, US 500, is an indices. It's an index of the top 500 companies. What you could do is you could just invest in, say, Netflix. But of course, if just Netflix goes down, all of your investments are going to go down, whereas the US 500 will take a bit of a buffer, because the top 500 aren't all going to go down at the same time. I know that looks like they are, but some will go up and some will go down, so it will drop a lot less than one individual share, if you know what I mean, and it will gain a lot less than one individual share, but there's less risk. You're spreading the risk, essentially. Anyway, this is a prepping channel. We're not a market analysis channel, but I'm just saying, money wise, you'll get a lot of people panicking and maybe investing in gold and that kind of thing, and not really knowing where to go. Luckily for me, I've seen all this before, so I'm not panicking unduly just at the moment. Anyway, aside from that, I found some really interesting news, and this will affect everybody, which is on banking. Let's go on to Lloyds Bank. So again, Lloyds Bank, look at the chart below. You've got all the sellers coming in. Everyone's just selling Lloyds stock, even though you've got a tiny bit of a retracement. So on the top chart, and the furthest to the right, you can see the green there, and that's where buyers have come in at the low point. Well, they didn't actually. They missed the low point and came in and bought, and they're starting to buy shares a little bit, but the sentiment is downwards. What I did find interesting under the news section of here, sometimes gives you a few insights. It doesn't give you inside trader information, unfortunately, but top UK lenders could be dismantled smoothly in a crisis, says Bank of England. Have you seen this reported on the news? I haven't. HSBC, Barclays, Lloyds, NatWest and Britain's other top 8 banks could be wound down in a crisis. Well, what crisis? Why have they suddenly brought this up? Without the immediate need for taxpayer cash. Now, do you remember there was the government bailouts during 2008 when all the banks, or a lot of major banks, collapsed, and then you had Halifax, TSB collapsed, Halifax collapsed, and Lloyds Bank ended up being told by the government to absorb them at their cost, kind of thing. So they ended up with it as a super bank, and then they had to, because they were too big and it was anti-competitive, they then had to divest all of those accumulations. But there was a government bailout, so there was a lot of government cash went into the banks to save them. But then, since then, there was a worry that the banks would be not too big to fail, was the phrase banding around after that, which is where they were talking about bail-ins. So they would be using the £85,000 limit that the Financial Services Compensation Scheme covers you for. So if you've got more than 85 grand in an account, anything above that 85 grand could be taken by the banks to help them keep running. So your 85,000 would be guaranteed. However, in the event of a major crisis, there was some speculation that even your 85 grand wasn't safe. So what they're saying here is they're obviously doing tests on, so it says being able to resolve or shutter an ailing major bank without destabilising the financial system or calling on taxpayers was a core lesson from the global financial crisis of 2007 to 2009. When many lenders had to be rescued with public money, as I just said. Our assessment gives further reassurance that if a major UK bank were to fail today, it could enter resolution safely, remaining open and continuing to provide vital banking services. They say that, but if there was a run on the bank, they'd shut them all. Using shareholders and investors, not public funds. So shareholders and investors are basically anyone with a savings account. So that's what they're talking about. So they could carry on remaining open after stealing all your money, is essentially what they're saying there. Post-financial crisis resolution rules were thrown into doubt last year when the global banking sector was rocked by Switzerland, forcing UBS to take over the struggling Credit Suisse. Yeah, because they said that they wouldn't use governments to help them out, but they did. So so what they tell you is one thing, and what actually happens is always another. So we've got here, in the first test of resolvability of 8 major banks in June 22, the Bank of England concluded there were no lenders that were too big to be allowed to fail. And Lloyds, Standard Chartered and HSBC were found to have some shortcomings in planning. So what they were basically told by the Financial Services Authority was to have backup that's not lent out to customers and not used. So it's kind of liquid money that they can access if they were to collapse. But we know for a fact that that's not enough. They haven't got enough. So they would then use, as it says here, shareholders and investors' money to bail them out, not public funds. So, your taxpayers don't worry about it, but if you've got savings or investments, like I have, pensions, they'll have the lot. So yeah, a bit of a concern that's just suddenly come up now when the chart is looking like that. So so that's my kind of analysis at the moment. The other one I was going to look at again was Lockheed Martin, and they tried to drop a little bit because all shares were dropping. A lot of people were coming in just selling all sorts. That's possibly where people had big investments in indices that Lockheed Martin were part of. And you can see that a lot of people are kind of selling. So they're probably selling all their stocks and shares because they're worried and getting out of the market. But what's holding these shares up, by the looks of it, is that there's some still major financial deals going on. You've got, where are we? Poland closer to buying Apache helicopters after offset deals with GE and Boeing. So they've pulled out of deals with GE, whoever that is, and Boeing. And then you've got the F-16 jets and all that sort of stuff, which are all being, I'm assuming, armed by Lockheed Martin. So there's that deal with Poland to do with Apaches, which I'm assuming Lockheed Martin are part of as well. So there's lots of financial deals going on, which is holding that share price up despite a big sell-off across the markets. So yeah, that's my opinion on it, and it is just my opinion. As I said, I'm not an expert. None of this constitutes investment advice. It's just from a personal point of view, but I hope you found that interesting. Right, let's go back to the camera and talk about the other stuff that's going on. Right, so I'll just quickly cover, because I spent far too much time on the markets there, quickly cover some other things that worth keeping an eye on as a prepper. So from a World War III update, really, you've got the Middle East is kind of kicking off. Also, Ukraine is kicking off as well. It's not been reported as much, but you've got F-16s are now being flown, I believe, out of Ukraine over Russia, which is definitely an escalation. And you've got Russia putting a bounty literally on every single plane and pilot, saying they get extra reward if they can shoot one of these things down. So that's interesting. An interesting game they're playing there. But back to the Middle East, the UK has said the message is clear to British nationals: leave now, leave Lebanon. So get out of Lebanon is the message there. And also France, US Embassy, and has also urged its nationals to leave on any ticket available. Prices have doubled over the weekend. Typical. Someone's making money out of that. So yeah, you've got UK, US, Australia, France, Canada, Japan, Jordan, South Korea, Saudi Arabia have recommended its nationals vacate the country as soon as possible. That usually means they are gearing up for war. So that's that. Then we've got Israel is bracing for an attack. Iran keeps saying, and also Lebanon keeps saying, we're going to absolutely obliterate Israel with a wave of missiles and everything else. Well, that's been days now, so they're still waiting. But not to say they should be complacent, but they are waiting for some kind of military response to one of their leaders, one of the Hezbollah leaders, being killed by Israel recently. So again, changes every day, something to keep an eye on. But that's one of the three main things that I'm keeping an eye on. As I said, it's the markets currently, the UK issues, and the Middle East, and also a little bit of Ukraine are the kind of three main things that I'm just keeping an eye on. If I get any other information about UK infrastructure, like potential grid down or anything like that, then obviously I'll let you know. So talking about the UK issues, just before I do that, there's some big storm, I think it's a hurricane actually, off of the Florida coast. One interesting thing I found about that was £1 million worth of cocaine was blown up on the beach after the storm, and a good Samaritan found 32 kilos of it and contacted authorities. I mean, you couldn't make that up. Yeah, so I thought that was interesting. But yeah, there's a big storm off the coast of Florida, so I hope everyone's okay there. Can't really see too much news about that. So yeah, in the UK, what concerns me most about the UK is the way it's being reported. Sky News yesterday reported that they were attacked in Birmingham, and they put video footage, which is still on the website. It's pretty blatant on there as well, although they've covered up, they've bleeped out the bad language and stuff. But basically what happened is in Birmingham, apparently a load of counter-protesters, I will call them, were on the streets thinking that the far-right thugs were going to be out in force, but they didn't turn up. So instead, the counter-protesters decided to go on an absolute mayhem and trashed a pub, beat people up, wrecked cars and stuff like that, but you wouldn't see any of that on the news. What you did see on the news was they attacked a Sky News van by stabbing tyres, so they all had weapons with them, and they not kind of threatened, but it was a very threatening situation. You can just see the fear on the face of the woman reporter, who was trying to just let us know about the situation, and the video will speak for itself, really, which if you check it out, you'll see what I mean. I don't think I can play it on here. That was on the news, but what wasn't on the news at all was all of the footage of them trashing a pub and people fearing for their lives in the pubs, and also in their cars as they were driving past. So there is definitely two-tier reporting in the UK, if nothing else, and I think that's all that's going to do is seek to inflame what's already happening. So unless there is a big turnaround from the government and the media in reporting both sides of all of this, then I think it's just going to escalate. That's my personal opinion, and so I think from my own prepping point of view, I live in a small town. I'm hoping that it's not going to come to a small town, but I can see this escalating all over the UK if it doesn't dampen down quickly. So if that does happen, it's going to affect the markets. It's going to affect what the government puts in place. If the government are still in denial, and the media is still in denial, then it's going to end up in draconian measures like lockdowns, like military on the streets, and that kind of stuff, and certainly digital ID, which is what they're pushing for. So that concerns me as well. So we'll have to kind of deal with that as it comes. This is changing daily, so I don't know whether I can allocate the time to get a video up daily, but certainly every couple of days I think I'll be just doing an update from my perspective. There'll be some of you watching who are in the towns where you're directly affected by this. If you are, I hope you're okay. Please let us know in the comments. Maybe carefully, because I know that Starmer is very careful to is saying quite blatantly that anyone even talking about this, and if you're against the narrative, then you're going to be targeted and put in jail, kind of thing. So yeah, you've got to be careful what you say. But yeah, I hope you're okay if you are in these cities, and let us know what's happening and maybe what you're doing as a prepper to kind of mitigate this. But I've got stuff in place to board up the house if I need to. I've had that for a long time. That's part of my general prepping. As far as defending your home is concerned, bug in, I'm still confident that bugging in is the best thing to do. But that could change. However, I've been doing some videos on camping recently, and I noticed that there was a news report about a load of asylum seekers who, after their hotel was trashed yesterday or the day before, are now spending nights in the woods. Well, I don't really want to be going wild camping, do I? If there's these people, especially when they've been filmed with weapons, etc., and I'm sure they've taken weapons with them if they're camping in the wild. Camping's off for me, unless it's on a proper campsite. But if they're camping in the woods, then wild camping's way out for me. I'm not taking that risk. Although the media would have it that there would be no threat to me whatsoever, but after seeing some of the footage online yesterday, I wouldn't take that risk. So anyway, that's that for me. I'll hopefully update in a couple of days. Stay safe, everyone. Thank you very much for watching, and in the meantime, stay prepared.